What's going on, guys? It's Godfrey Buffett bringing you Tycoon Talk. Today we will talk about the 10 reasons why I don't trade stocks or Forex. Disclaimer, trading stocks or Forex in of itself is not bad. I'm not here to condemn you if you partake in them. I'm simply just explaining the reasons why I don't partake in them. I think it's very important to understand some basic form of investing and fundamentals of it before diving into other forms of creating profit. It's important to learn how to walk before you can run. Don't rush the process. Many of you have asked for this video and we're going to be covering a whole lot, so this will be a 4-part episode. My top 10 reasons why I don't trade stocks and Forex are sleep and peace of mind, circle of competence, ownership is the name of the game, value, return on time versus return on investment, slow success builds character, fast success builds ego, the youth, don't fire your best workers, Black Friday, and life is art, not numbers. Sleep and peace of mind is underrated. We over-glorify late nights and early mornings. I don't care who you are, what you're working on, what you're doing. Lack of sleep will have a negative impact on your physical and mental health. We are already up during the day, so to force yourself to be up late nights and super early in the mornings is very, very dangerous. Take it from me. I've worked multiple jobs, day, night, day and overnight like clockwork. And believe me, it does have a huge impact on your health and your family and your social life as well. When it comes to trading, sometimes you're up late, early, before market opens. And I simply just don't have the time and the energy for that. I mean, we already trade so much time for money as it is. On a normal basis, I'm not looking to trade any more time. At any moment, the stock market itself actually can be closed or trading can be halted. If the S&P 500 drops rapidly, it can even trigger what's called a circuit breaker. A circuit breaker acts exactly like your circuit breaker you have at home. It's designed basically to protect the markets and also to slow things down enough for some minutes for everybody and traders to really look at the market conditions and understand what's going on. There are 3 levels to this circuit breaker system. Level 1 is a 7% same-day decline of the S&P 500, which at that point the market will pause for 15 minutes. Level 2 is a 13% same-day decline of the S&P 500, which the market pauses for 15 minutes. And level 3 is a 20% same-day decline of the S&P 500. If level 3 is breached, trading is halted for the rest of the day. So just understand when you're trading, if it's during circuit breaker time, you can see and understand the volatility and the swings that goes on. This information can be found on the New York Stock Exchange trading section on their website. But don't worry, we took out the minute it would take you to search and find it. We'll have the link below in the description for you. On March 9th and March 16th, we actually hit 2 circuit breakers. And I'll put a link below in the article that explains exactly what happened, what occurred, and how it impacted everybody due to COVID. Most people are overconfident and think they actually know more than life itself. There are 2 classes of forecasters. Those who don't know and those who don't know that they don't know. The point is, no one can predict the future, so those who does in relation to the stock market is merely just speculating. If you think stocks go up because of you, you have a long way to go. Stocks do not go up or down because of what you think. So therefore, I spend 0 time on what people think it will do today, the next hour, the next minute, the next day, the next month, or the next year. The only thing I do is just buy, which I spend about 10 minutes a month on my ROBINHOOD stock portfolio, and I do not buy based on price alone. As the Oracle of Omaha, Warren Buffett, said in his 1985 interview, the price doesn't tell you anything about the business. He would rather not know the price when establishing his valuation and then look at the price after. This way he is not influenced by the stock price. The link to that interview will be below in the description. When somebody's buying, somebody's selling. And both people think that they are smart. So until next time, stick around for part 2. Stay safe, chop life, stay tycoon.